All right. Well, welcome to Rocket Dollar Real Quick Recorded Presentation with Josh over at Green Coffee Company, also Legacy Group. Um, he has a very interesting opportunity here to talk about. So I'm going to go ahead and turn it over to you, Josh. Tell us what's going on.
Well, thank you. It's great to be here, Nick, and present to the group for this webinar presentation. And I'm going to be talking about both Colombia and the alternative investment landscape there, but more specifically, the Green Coffee Company, which is a Legacy Group portfolio company and Colombia's #1 largest coffee producer. So this funding round that we're currently in is truly a one-of-a-kind opportunity to earn outstanding financial returns investing in a leader in the global coffee industry. So let's get to it. My name is Josh Ziegelbaum. I'm the Director of Investor Relations at Legacy Group. We're the outside asset manager and controlling board member of Green Coffee Company, a company that we founded in 2017 and have built from the ground up through 4 funding rounds. I spearhead those funding rounds and all things investor relations. In terms of what we do at Legacy Group, we target profitable investment opportunities with high social and environmental impact with a strict focus on high quality businesses in Latin America. And we bring those direct placements to our high net worth investors who are primarily based here in the United States. I sit in Fort Lauderdale, Florida, where I head up investor relations, but periodically travel down to Medellín, Colombia, visit the farm and the operations. I was just telling Nick right before we press the record button here that I had a chance to go out earlier this month with a group of investors, show them the farms and the operations at Green Coffee Company. It was a truly memorable experience. So we do some really great work on the ground in Colombia. But before we dive into the specific offering of Green Coffee Company and its Series C funding round, I'm going to talk to you about the Colombian alternative investment landscape and why it's ripe for opportunity. So a few bullet points here, which we're going to dive to on the coming slides, would be the high upside and low initial investment amounts, favorable economic conditions, and arbitrage-like returns from the exchange rate differential, some relations with U.S., the long history of democracy there, gaps in the market, and the ways that our investors are looking at the market in Colombia as a means to diversify against their primarily US-based portfolio. So firstly, it would be the high upside with low initial investment amounts. The current exchange rate for US-based foreign investors is the most advantageous it's ever been for investing directly into Colombia. On a purely US dollar basis, investments today cost investors investing into Colombia less than 50% of what the same transaction would have cost them in 2012. Investment amounts to enter the market are therefore naturally lower. Colombian businesses are proving to have high growth potential, and we see emerging market unicorns such as Rappi and others making foreign investors very wealthy.
Yeah, that was going to be one of my questions on the currency exchange rate. That sounds like well, you just answered it. So
yeah, so right here on this slide, you'll see that the current exchange rate. So before, this is a 10-year chart here, right? So in 2013, the exchange rate was sub 2,000 to 1, and we're pushing close to 5,000 to 1 today. So that means all else equal, the dollar investing into Colombia is able to buy more than twice as many assets as it was able to just 10 years ago. And even if you look in the last 12 months, some very strong movement in the exchange rate. It was sub 4,000 to 1 in parts of 2022. It just really started to take off here to close to 5,000 to 1. So we're seeing great buying opportunities in the market for dollar investors in Colombia as a result of the macroeconomic conditions. So Colombia has a long history of democracy. There was a global competitiveness report prepared in 2021 by the World Economic Forum. Colombia ranks as the #1 Latin American country for corporate governance in that report. And the same report ranked Colombia as #2 for both business dynamism and financial system stability. The country itself is the longest running democracy in South America. And its support for Western capitalism goes a long way in establishing goodwill in the foreign direct investment market. So the US has been the largest trading partner for Colombia. We expect that to grow over time. There's opportunity for a revamp in the global supply chain with all the instability we're seeing throughout Asia and other parts of the world. As supply chains evolve and the US refocuses key priorities away from China, Colombia will stand to benefit from that. And really, this has increased since the COVID-19 pandemic, and we're seeing that continue even today. This is an interesting one. There's gaps in the business ecosystem that can be exploited. It's most certainly something that we're doing on the ground through our portfolio company investments at Legacy Group. Entrepreneurs are flocking to the regions to fill gaps in historically inefficient industries in these markets, such as banking and finance. Opportunities are being generated given the additional foreign capital, real-world human capital, and world-class technological innovation that's happening on the ground. For example, with what we're doing at our portfolio companies. Deal flow is really lacking in developed venture capital markets. Firms have excess capital and valuations are very high. They've been tapering off a bit lately. But venture capital firms and high net worth investors have to look outside their home markets for arbitrage level returns. As these inefficiencies exist, really on a macro scale, there's less competition in the market and the rewards are higher to those who are winners. Opportunities like our own at Green Coffee Company aim to control the entire value chain of coffee within Colombia and not just one piece of it. It's not possible to be great at only one aspect of the value chain and create a viable company. The most successful companies modify or recreate the entire value chain to control a vast majority of it, and they will make significant returns for investors as they become successful. So the large domestic consumer market is definitely important economically. The population of Colombia is currently 52.3 million. Domestic wealth creation is growing. Consumer spending reached an all-time high in Q3 2022. And that wealthier population has been adding value for foreign direct investments.
Let me jump in real quick. Just wanted to ask, would you consider Colombia as being part of this emerging market structure that's happening based on what's the progress that they're having?
I would. We would definitely still consider Colombia as an emerging market,
right,
and the go-to emerging market, in our opinion, in Latin America. You know, there's a significantly lower GDP per capita than you'll find in the US, much lower minimum wage. You know, there are an affluent group of people living there, and consumer spending is strong. And as I've mentioned here, domestic wealth is increasing, but it's most definitely an emerging market for investment purposes, and has higher return potential that you would find in other emerging markets, and higher growth that we expect in the years to come.
Right. Great. Thank you.
Of course. So Colombia also acts, finally, as a strong diversification play. Investors that work with us are heavily allocated in US-based assets. The current structural, political, and monetary issues in the US are pushing investors to look at other opportunities. We would advise investors that it's an excellent time to begin looking outside of the country for investment options. There's a lack of investable asset classes in so-called developed markets with potential returns in excess of the current rate of inflation. Inflation is currently running hot and recently reached its highest level since February 1982. Within Latin America as a bucket, there's no better choice than Colombia in terms of stability and upside. So we're going to provide an example here of how we provide diversification for our investors. The Green Coffee Company is a Legacy Group portfolio company. It's a consolidated coffee farming operation based in Medellín, Colombia. Its innovative business model allows complete control of the supply chain from cultivation through processing to direct trade with our end clients. What I'm going to do is I'm going to share a brief 2-minute video of our 2022 harvest overview at Green Coffee Company. Then we're going to switch back to the slides here. We're going to go through the investment terms of the Series C offering.
That was great. Thanks for sharing that.
Yeah, thank you. Okay. Are we back on the slides here, Nick?
We got the slides going.
Perfect. So I would like to dive into the summary of the investment terms for Green Coffee Company's Series C funding round. This round was initiated in September of 2022, and we're currently issuing $25 million of common equity to our high net worth individual investors. We set forth a minimum investment of $100,000. The focus of the Series C round is on achieving a dominant market position in Colombia. We're already the largest producer, but we're by no means finished in our expansion efforts. We want to get into roasted coffee, which we're going to talk about more in the presentation here. And also our newest revenue channel, sales of vodka and spirits and other products derived from coffee byproducts, or the waste of coffee production. So we're going to go into the use of proceeds, touch on these different initiatives here. This $25 million equity raise is being done concurrently with a $75 million debt financing round. So this total use of proceeds is $100 million in the Series C funding round. We have a base share price of $1,200 a share. We already fully subscribed our first two tranches, Tranche A and Tranche B, and we're in the final tranche of the funding round as of the time of this recording here in February 2023. We have a 6% preferred return associated with our investment, and if unpaid in any year, will be caught up upon exit, which is expected in 2026 through sale or IPO of the company. So the use of proceeds, how are we going to be investing this $100 million of fresh growth capital into the business? Farmland acquisition payments and farmland development and infrastructure make up more than half of the budget. You can see over $50 million is earmarked towards buying additional farmland, and we expect to grow up to 15,000 acres by year end here in 2023. We also want to duplicate what we've already done in Salgar, Colombia, and replicate that in another region of the country in order to have year-round coffee production. We have a primary Q4 harvest where we're operating currently, but we're looking at the Coffee Triangle as an example of another region because it has a large harvest in spring. So with that, we expect to meet the needs of our global clients. U.S. roaster construction, $15 million earmarked towards the build out of a US-based roaster. And the reason being that we could sell at higher margin and bring the green coffee that we're selling now on a wholesale basis, which is unroasted yet processed coffee, through a roasted sales channel. And then finally would be the alcohol distillation facility. We're budgeting $6.4 million for the build out of a distillery on site at our wet mills in Colombia so that we could create alternative products from the waste of coffee production. 80% of the coffee cherry is typically discarded, and only a small amount of it is used for the coffee bean that we know and drink. And at scale and at capacity, we're anticipating 38,000 bottles of vodka per day from our distillation facility. And then finally would be a working capital budget, funding our trading operations described in the presentation here, retiring debt, and for other purposes. And in summary here, that's our funding round.
Thank you very much. Is any of the development and infrastructure going to some sort of maybe solar energy or wind, water?
Yes, absolutely. I'm glad that you asked. So we have a solar farm that's been built out. I guess you can call it a solar facility as opposed to a farm. That's been built out at our wet mill in Salgar. So we have a parking area that has full solar on the roof. We also have solar on the roof of the facility, and we're using that to supplement the energy consumption at the facilities.
Great, thank you. And it looks like it's a 3-year time horizon on this particular project or investment. One thing that you did mention was trips to Colombia, and as you know, if the investment is done through an IRA, that could be a little bit problematic. So we just want to be careful when mentioning that to investors who are interested in doing this in their Rocket Dollar account self-directed IRA. Really, we would recommend that there's no special privileges given to anybody that does make the investment through an IRA, so that it doesn't come across as being a prohibited transaction. We wouldn't want anybody to inadvertently suffer the presence of an IRA auditor if that were to happen. So just a heads up on that.
Perfect. Thank you very much.
Sure thing. Is there anything else?
We have some more slides here, which I'd love to dive
Yeah, let's
into.
do it.
I think we're good on time.
Yeah,
So
yeah, it's only been like 15 minutes, so great.
yeah, let's go. So I got more here. So our story, how we became Colombia's #1 largest coffee producer in 5 years. In 2017, we seized the moment to create the business, and we wanted to challenge the traditional coffee industry and build a business that could generate value for all stakeholders in the industry. It's really been plagued by generations of lack of investment, particularly foreign investment, a lot of decentralization, smaller landholding families that have owned property for generations using really antiquated practices. So in less than 5 years, we've become the largest producer of coffee, hitting up to 7,000 acres of landholdings just about in the time of this presentation, and now exceeding it. And we have a goal of becoming the world's largest coffee producer of Arabica in the coming years. And we built a business focused not only on scale, but high quality, technologically advanced, and things that have never before seen in Colombian coffee. So our track record, this gives you some nice stats on the company as of the time of the launch of the funding round. 27 farms, 6,600 acres, over 7 million coffee trees, over 400 full-time employees. Investor count is now approaching 400 as of the time of this recording. Over $50 million has now been invested to date. The company has several environmental certifications, one being Rainforest Alliance, the other being Cafe Practices. We're a member of CEA Colombia, which is the Council for American Enterprises doing business in the country. Last year, we received an award from Colombian Congress, Best Technological Innovation in Agriculture, and we're leading the coffee industry in several sustainability metrics.
Very nice. Do you get any questions about fair trade certification?
We have. So we don't have a fair trade certification, but Rainforest Alliance it's similar in the sense that there's
Okay.
strict ESG guidelines and metrics that need to be met. And we've had people from the group come out, visit the farms, handle inspections regularly, and some rigorous certification was needed there.
Fantastic.
For
Great.
the Rainforest Alliance.
Great. Thank you.
You're welcome. So where the company is going is where we should really be excited about. So here's the timeline that we have planned in our Series C funding round. So scaling our farming operations and achieving a dominant position, duplicating what we've done already by buying additional farms through the end of 2023 here. We're also currently building out our distillery on-site at our wet mills in Colombia. We just opened the test distillery, which we have videos of on our YouTube channel. We expect that to come online as well. The Roasted Coffee Initiative in 2024. We already have a direct-to-consumer brand that we established. We're diligencing sites in the US for the locations of our US-based roaster, and we expect by 2024 to begin shifting even sooner than that through third-party sales, but shifting our own production to roasted and then selling direct to our clients on a wholesale basis. So in 2021, we were in our Series B funding round. We were Colombia's third largest coffee producer. We had 2,300 acres of land, 3 million coffee trees. We are forecasting a 6.4x net equity multiple on invested capital. Fast forward to the launch of this funding round and at the end of last year and then into this year in Series C financing. Colombia's #1 largest coffee producer. We've grown our position there and solidified that. We've more than doubled land holdings up to 6,600 acres. We now have 27 farms, 7.7 million coffee trees at the time of the launch of this round. And the expected equity multiple is increasing. So we're forecasting an 11x net return on invested capital through 2026 exit. And the reason for the increase is the further capacity of our additional farms, fueling more coffee, and then the further capacity in our US-based roaster, and then, of course, the build-out of the byproduct initiative. So we did not have financial assumptions on the byproduct initiative. Building out a facility to create ethanol and vodka was not part of the Series B round. So that's a newer initiative that's been added here, and it's expected to produce $49 million in top-line revenue just from the byproducts in a 2026 exit year. So the team definitely makes it special. I'll talk about some of these team members here that we have on the slide. Boris Woolner, our company president and CEO, decades of combined experience in the Colombian agricultural space, very strong working relationships in both coffee and in government. To his right, Cole Shepard is the founder of the company. He's also a GCC board member and partner at Legacy Group. Cole had a full background in corporate finance, doing international mergers and acquisitions advisory at PwC. Adam Jason, to his right, also a partner at Legacy Group and a GCC board member, had a full career as a corporate attorney, representing companies in public and private debt and equity transactions. CFO Leonardo Sanchez, who you see below them, he had a full career working in Latin American corporate, most recently at Fox, where he spearheaded projects there. And then I just want to touch briefly on the strategic advisors you see at the bottom. Chris Kelly is a partner with Jones Day, one of the largest law firms in the world. He joined us a little over a year ago as a strategic advisor to the company, and will really be helping to drive the business forward as we pursue a public market transaction. Steve Oakland, strategic advisor of ours as well, joined last year. And Steve is currently the president and CEO of Treehouse Foods. It's a publicly traded company here in the US. And Steve has an extensive career. He was the president of coffee and food service at J.M. Smucker Company, overseeing Folgers and Dunkin's brands. And as the CEO currently of Treehouse Foods, Steve oversees over $4 billion a year in revenue, and is a great addition to the team, and will be unlocking incredible relationships for us in the roasted coffee space, among other things, of course. So our execution strategy, creating value from 3 core pillars. Pillar 1 is what we're doing now and what we're going to continue to do: best-in-class coffee farming and production at scale, and green coffee sales. Already being number 1, we still want to grow from here, targeting up to 15,000 acres by year end here in 2023. And that's really just the first pillar of the business, which will support the other 2 pillars. The other second one being large-scale roasted coffee sales. We talked about the location in the US. So building out a roastery in the United States will allow us to sell upwards of 30 million pounds of roasted coffee per year going into 2026. And we expect to do 200 million plus in revenue from this vertical in that year alone. Finally, pillar 3, vodka and spirit production from coffee waste. We talked about the background, 80% being waste essentially, and only 20% being used for the coffee cherry or for the coffee bean that we know and drink. The B2C liquor market is expected to generate us $49 million in revenue going into a 2026 sale or IPO. We never broadly shared this with investors prior to the Series C round, and we're excited to present it to you here. So between these 3 pillars, we expect total revenue in our exit year of $266 million. This will just give you some visuals of the planning and the maturation and really the process of producing best-in-class coffee. First, we have the nursery, and then that's headed up by a group of single mothers who are heads of households, and they are encouraged to, of course, plant in the nursery. And then after that, it's taken by the team out to the farms, planted in the farms until matured. Then it's, of course, harvested. Everything is handpicked and then processed in our facilities. We showed you some of the facilities in the video that I shared. And then we go through quality control and then delivery to our end clients. This map here shows the historical growth through acquisitions that the GCC has done since inception. So with that seed funding round we did in 2018, we acquired 600 acres, and we've been expanding aggressively since then. We're up to just over 7,000 now as of the time of this recording, expecting to be just about 15,000 by year end. This is about 2 hours outside of Medellín by car, maybe a little bit longer if you hit traffic, and I'd say about 15 minutes by helicopter from Medellín. So pillar 2 is large-scale roasted coffee sales. We talked about this, of course, in prior slides, but the purpose of this is just give you a visual of the margin differential between green or unroasted coffee and roasted coffee. You can see 29.2 on green, and then almost 50% margins on roasted. The roasting facility is expected to do over 3 million pounds per month, and projected to produce over 200 million in revenue, 217 million in 2026. And this is just for a capital cost of just $15 million, expected to be completed in mid-2024. The images that you see on the top here are from our specialty consumer brand that we launched, Abira, and we have that available for purchase direct to consumer on our website, abiracoffee.com. So pillar 3 is the untapped potential of the coffee cherry, building that distillery at our wet mills to produce or process cherries on site into ethanol. We're going to focus on spirit production first, as it doesn't face the same requirements that products like teas or cosmetics have. We're the largest coffee producer in Colombia, so we have millions of pounds per year of free waste that we're going to be using to create additional revenue streams for our investors. Capacity of 38,000 bottles of vodka per day, projected on $49 million in 2026 on top line revenue. Capital cost of just $6.4 million from the use of proceeds of this round. And this is expected to be completed hopefully by the end of 2023 here. We didn't talk much about this, but social impact, environmental impact. We focus on value creation. Initiatives that we engage in all generate value for the GCC. We use waste products in order to create revenue. We reduce water. We have reduced plastics in our planting mechanisms. And we have certain environmental certifications, which we talked about previously in the presentation. Some key impact initiatives. These sustainable development goals on the left-hand slide are those that we focus on from the UN. And formal employment, I'll just talk about this top left-hand corner box. And in summary, the formal employment is something really special about this opportunity and something that we're doing that's changing the way in which coffee is produced and that people are employed in the industry in the country. Pension plans being first, we provide 75% of our employees with pension plans, where the sector average is just 1%. Healthcare coverage, 100% of our employees have healthcare. Sector average is only 3% in the industry there. Formal banking, we're more than double the sector average, 95%, where the sector average is 41%. And we do a lot of other things on sustainability, but I think the formal employment is one that's important and that resonates with me and our investors.
Yeah, that's incredible.
Thank you. We're going to be wrapping up here with our exit plan and financial projections. So as we get into that, here's some potential exit opportunities for us. One would be a corporate buyout. So that's getting bought out by a large corporate buyer that wants to control production at origin. Next would be a private equity buyout. We believe that GCC has the ability to attract interest at scale from active buyers who are interested in agriculture, like larger PE firms than us, of course. And then the IPO. This is the most profitable option potentially and is our target exit option. And we've backed into an assumed exit valuation based on an IPO in 2026. And we'll talk about that in the next coming slides here. Some comparable public companies that recently had market transactions that are in the space. You can see the first 4 incalculable price to earnings multiple ratios, as they did not have any profitability. The other comps here, PEs of 116 and 37 respectively. So what we did was we mapped out a path to doing 266 million in revenue in 2026. We expect to do $60 million in annual net income on that. So we applied, instead of the multiples of these comparables, the historical multiple of the S&P 500, which is 20 times earnings, which backs us into an expected valuation of $1.2 billion in our exit year of 2026. This pro forma slide, which is included in our investor presentation, breaks down the revenues and how they scale over time and from which initiative or pillar they're derived from. We expect to phase all of our revenue into roasted coffee sales and byproduct sales by 2026. 266 top line. You can see the 86 million in EBITDA and 60 million in net. That $1.2 billion valuation, a net of all fees, projected IRR 64.1%, and an equity multiple of 11x on invested capital through a 2026 exit. We mentioned the final tranche of the round. We're currently in the final stage. We're going into it this week, the time of this recording. First 2 tranches have both been fully subscribed by investors since we launched the round in September. There's limited availability. We expect the balance to go quickly. If you'd like to get in touch, you can contact me directly at investor.relations@legacy-group.co or on my cell phone, which is listed here on this slide.
We'll also have this on the partners page, so that should be easy to get in touch with you. So thank you, Josh. Really appreciate you sharing this unique opportunity with us. It's definitely something That's going to be different in the alternative space and private markets. So it's great. One thing that we do want to add, of course, is just that investors are responsible and that they're aware of the risks associated with making the investments, as they do have the ability for profit just as much as they have the ability for loss. So just do your homework, everybody.
Good speaking with you guys.